The key global event this week was the Federal Reserve's first meeting of the year, which also included a press conference from Chair Powell. Rates were kept on hold as unanimously expected, but the Fed surprised with a dovish pivot. Now, the Fed's view on the US economy hasn't actually changed that much. They're discussing labour market strength and economic activity that has been rising at a solid rate. But there were two vital changes. Firstly, the FOMC dropped their long-held view that some further gradual increases in the funds rate were likely, and rather now they will be patient as they determine future changes. Secondly, the Fed released a separate statement on its balance sheet management. At the December meeting, Chair Powell said the plan was to have the balance sheet run on automatic pilot. Now it is prepared to adjust any of the details depending on economic and financial developments. The withdrawal of central bank liquidity has been suggested as a contributor to recent heightened volatility, so the changes to the balance sheet runoff are important. Both of these were taken as clear signs by the market that the US tightening cycle is now over. In recent months, markets have swung from pricing substantial further hikes in 2020 to roughly flat in 2019 and now toying with lower rates in 2020. This dovishness underpinned a solid rally in equity markets to end the week, while the US dollar and bond yields shifted lower. Domestically, the week started with some poor news, with a shocking collapse in the NAB business survey. Business conditions collapsed, with the largest monthly fall since the GFC, while confidence was steady at +3, although that is still a below average reading. The year has started with a fresh bout of negativity towards the Australian economy, and this data saw the market entertain a further chance of RBA cuts. However, the Aussie dollar then regained some strength with the release of the Q4 CPI data. While the headline measures came in a tad above expectations, the core measures still show inflation was well contained. But this print should provide some comfort to the RBA ahead of next week's flurry of commentary. And this was further enhanced by a media interview from RBA board member Harper, who repeated the expectation that the next move in rates will be up. Iron ore has also rallied, up a stunning 12% in the past week, largely in response to the Brazilian dam disaster, which will constrict global supply. Whether this holds up is doubtful, but it also added to the positive backdrop for the Aussie dollar. Lastly, there were signs of positivity in US-China trade negotiations, with President Trump tweeting that the talks were going well. All up then, that is a conducive backdrop for the Australian dollar, which has been the strongest G10 currency this week and is approaching 8-week highs. Next week, Australia's data calendar is very crowded, with the release of the Banking Royal Commission on Monday, then plenty of RBA headlines. We have the board meeting on Tuesday, Lowe's speech on Wednesday, statement of monetary policy Friday, so there will be plenty of opportunities for volatility. However, if the US dollar remains on the back foot and commodities supportive, the Aussie dollar should find further support. We'll be back to talk to you next week.